Truly the future of financial services. Blockchain is paving the way for the evolution of financial services, and each of you are truly at the center. In this moment, we'll hear from the most innovative thinkers who are here to disrupt the status quo and reimagine that future. They will explore infrastructure, custody, and digital asset management. In a moment, we'll be joined by Jacek Trzmiel from Coinfirm, Godefroy Schrago from FiveT Fintech AG, Christian Rao from Mastercard, Lamine Brahimi from Taurus, and Dominic Castley from Sygnum. This panel will be chaired by Sandro Knöpfel from the Cardano Foundation. Please give a huge Cardano welcome to our panelists.
What an introduction. Great to be here. Thank you so much for attending this panel, to have listened to the discussion we have. The latest development in the market actually showcased the urgent need to have a reliable and trustworthy infrastructure for financial institutions and its clients. And I'm very happy to look at my panelists here, which are true industry experts, building and helping to shape an environment where we can help businesses upgrading to blockchain, businesses build new business models on blockchain, consuming data, and as well developing dApps, DEXs, NFTs, native assets, and tokens. So thank you very much for attending, and thank you very much to the panelists. I truly believe that this is going to be a great discussions, and for the audience to understand who you are, and where you're working for and what your role is, please, for a short introduction, Jacek.
Hello, everyone. My name is Jacek Trzmiel. I am the head of business development for banking at Coinfirm, a leading European and global AML blockchain analytics company for the crypto space. Initially, I entered from the banking space, from the compliance at various banks, including Swiss UBS Bank, and joined Coinfirm 4 years ago.
Thank you, Jacek. Godo.
Hi everyone, I represent FiveT Fintech. We initially started as a hedge fund back in the days, evolved over the years, now active on the VC space as well. We used to be actually called Avaloq Ventures, and we did a management buyout together with FiveT and Francisco Fernandez, the founder of Avaloq, back in 2021. So we still work very closely with Avaloq, the core banking system provider. They have 150 plus private banks on the platform, and we are very close to the respective discussions.
Exciting. Thank you for being here. Christian.
Hi, my name is Christian. I'm working for Mastercard in what we call Fintech Enablement in crypto. I've been with the company for roughly 10 years. I guess everybody knows Mastercard, but just to be very clear, we don't give out cards ourselves. We don't issue cards. We work with banks that issue cards and work with banks and technology providers that accept cards, and we are one of the leading payment providers in the digital space. And of course, for us, the topic is very interesting because we see that the industry is going in this direction. We see consumer uptake, and very happy to be here today. Perfect.
Thank you so much for being here. Lamine.
Hey, good morning, everybody. I'm Lamine Brahimi. I'm one of the co-founders of Taurus. Actually, I graduated from here 20 years ago, so I'm pretty happy to be back. And we still have a relationship with some of the cryptography labs at EPFL. Taurus, we do two things. We provide digital asset infrastructure, mostly to regulated financial institutions, roughly 25 banks in Switzerland, Europe, US, Middle East. And the second thing, we have a marketplace to trade tokenized securities. Looking forward to the discussion.
Thank you for being here, Lamine. Dom.
Hi everyone, my name is Dom Castley from Sygnum Bank. I'm Chief Marketing Officer. So Sygnum is a digital asset technology group which has a registered bank in Switzerland and also has a CMS license in Singapore. Sygnum was born with the idea that the future has heritage. And our mission is really to empower everyone, everywhere, to own digital assets with complete trust. And I think as we move forward for this exciting vision, it's a core principle of ours to take with us on this journey, the traditions, the principles, the values, the rules, which is really embodying the best of traditional finance as it's built. And we think this is the best way to build trust and also to secure reliable mainstream adoption. Our core products here range from digital asset banking, asset management, tokenization, as well as B2B banking. And we also have a lot of innovations that we've launched recently, the first Swiss bank to have a hub in the metaverse, and also just recently launched a compliant NFT platform as well. So thanks for today and look forward to the panel.
That's amazing. Thank you so much. And as you can see, we have perfect panelists here to actually look at what we are working on when we talk about the value creation. So we are covering the trust layers with forensic tools, data analytics. We are looking at the integration layer into the infrastructure layer by having on-off ramps, by having core systems, by having custody. And we have the financial services with the regulated bank here. And that's truly important to achieve what we are working on to build or to enable a value capture level for the world outside where you are living on and building on. So thank you so much. Jacek, may I start with you? One of the most common narrative these days is that crypto is actually being used or can be used for anti-money laundering. It's for criminal activities. So there is this concern that crypto has a very bad taste in the mouth. When we look at your work, what you're doing on Coinfirm, you have a lot of tools supporting actually the fight against financial crime and how you can support to actually have the opposite thing thanks to blockchain technology. What is your state here and how do you try to achieve that?
Thank you, Sandro. As a matter of fact, it is important to point out that still fiat currencies remain the main currency to be used for the money laundering, avoiding sanctions, cash, wire transfer, card payments. Cryptocurrencies and its volumes is nowhere near to that. So that's an important factor. Just to set the bridge to current developments, if you take as an example the Ukraine war right now, many people fear that cryptocurrencies would be used for sanctions avoidance. And what we saw in the market was that cryptocurrencies are not the best tool for that anyway, for big volumes, for millions, multiple millions of dollars. So we didn't see that development really. What we saw, however, is that cryptocurrencies were widely used by refugees for crossing borders, exchanging their weak currency in Ukraine into stable coins, and then converting them back in the countries where they ended up on the journey. That, of course, that part was also used by scammers. And we need to understand that forensics and blockchain analytics and AML is there also to protect consumers, to protect individuals from being exposed to various scams, frauds, identity theft. It's not just money laundering per se or sanctions. Now, in cryptocurrencies, Monero would be an example of untraceable cryptocurrency, which may and is used by criminals. At the same time, we see some volumes in Bitcoin. Other than that, there is not really a widespread usage for criminal activities, money laundering, compared to fiat transfers, right? So what we do at Coinfirm, how we help financial sectors. So we help in wide adoption of cryptocurrencies in the financial sector. When we say that, we need to remember that blockchain is both transparent and pseudonymous, and that gives immense opportunities. Everyone with access to the nodes can see all transfers on blockchain. At the same time, with the right technology, proprietary technology, algorithms, scrapping of data using public sources, but also doing investigations, forensic investigations, you can actually understand and create clusters belonging to criminal activities, as well as to totally licit legitimate services. With that, you can differentiate between criminal actors and legitimate actors. And that brings a lot of understanding for the financial sector to understand which clients we can onboard with their source of wealth, source of funds, originating from the legitimate sources, and differentiate that from hacked funds, from scammers, fraudsters, etc. There are different means. We could talk a lot of time about this, but definitely there are very good ways of understanding and differentiating that.
So the actual technology allows much better, faster accessibility to actually details of transactions, which allow as well law enforcement to actually fight against financial crime. And maybe a question as well into the round, when you think about those transactions you monitor on daily basis in your operations, what about is reporting? Is this something you are lacking today? Question to the other panelists, you're lacking today and you would require, or do you already consume this from providers such as Coinfirm? What is your experience here? Godo, maybe starting with you.
Yes, so we looked at the AML space and we actually invested in Coinfirm. So we looked at the different players provided this data. We also looked at the tax topic, which often is completely neglected initially from a crypto perspective, like how you would treat an airdrop, how you would treat an NFT, how you would treat all these different topics that are not yet regulated. So there is a solution also where we've been involved, which is BlockPit. And so there is all these different aspects that are required by most banks before they can really onboard a specific project. And all these need to be typically, or the banks need to check the box before they actually move into it. And that's why the adoption has been much slower than the typical crypto project that is more, let's do it, let's build the tech, and let's see afterwards how the regulators treat it.
Thank you. Any comments from the rest? Then, Lamine, maybe I'll continue with you. Especially given the latest happenings with FTX and so on, there is there's a big issue with the trust gap, right? People do not really trust anyone who manages their key, who offers custody, but they don't feeling comfortable necessarily by doing self-custody, managing their own key, because there is the other issue of how you're doing it. And I know all of you most likely are experts in managing your own keys, but when you go onto the street, many people don't want to take this responsibility. So what is Taurus doing towards financial institutions and towards their clients to offer a safeguarded environment to be comfortable handing over this responsibility?
Yeah. So it's true that what you said, FTX collapse 2 weeks ago seemed like, a major issue for many of the guys who read the news. The reality is, trust, should always be at the core of any type of digital strategy, asset strategy. A lot of people used to think that it is granted. Mt. Gox, for us, FTX is just Mt. Gox with blue collar, right? With very flashy investors' names at the back. But the core of the nuclear plant should remain, protecting your private keys. And the message number one, don't trade convenience with security. Security should come always at the top. It doesn't mean that the security solutions shouldn't be convenient to use, but I've heard many, many times, oh, it's easier to do it like this. Let's do first, leave our assets in whatever exchange or do sub-custody. Our core conviction is if you want to have a proper digital asset strategy, at some point you need to have control and sovereignty of your keys. That's why we worked with banks like Sygnum. We work also with systemic banks. We've interacted also with you, Mastercard in the US. It's very important to have control of your private keys. delegating assets elsewhere is obviously necessary, but if you do this, you need to have strict counterparty risk monitoring. So, I was quite surprised that people didn't know, I was asking, some fellow peers in the industry, do you know what's your exposure to your counterparties in real time? Many of them didn't know. And you say, why? Oh, we trust them. It's good to trust, it's better to verify. So in a nutshell, what we provide is we provide, a vault that can be used independently on whether clients are willing to treat or deal cryptocurrencies, digital assets, whatever they are. Really, you can really write a smart contract with randomly generated functions. We're able to process them, and digital currencies. So we're working with some financial institutions to do that. And it's very important to have that in, at the core of your strategy. If, you still think that convenience is number one, my suggestion is you're probably not that serious about it. And, you can do some stuff, but don't bet all the eggs in the same basket.
Thank you. I think one of the questions as well, when we talk about custody, especially from banking side, and I think at a traditional banking with different regulations, segregation. How do you segregate prop assets from client assets and so on? What is, for Sygnum as an example, Dom, how do you deal with this, and is this something you would address with Lamine as well?
Yeah. I mean, firstly, I think we're totally aligned on security is always a top priority, able to generate that trust. On our custody solution at Sygnum, handle it in different ways. So our wallets are actually segregated from other wallets, so individual client wallets. So there's no omnibus wallets, and so there's a technological level of security there. It's backed up also with multi-layer security platforms, everything from the software, the hardware, through to the governance and audit. But I think at the moment, it's quite an interesting topic with the actual ownership of the assets from a legal point of view. And as a licensed bank, we're able to hold all of our client assets off our balance sheet, which is critical. And that means that the crypto is theirs no matter what happens, even in the unlikely aspect of a Sygnum bankruptcy, for example.
Yeah. Thank you. Any comments on that?
Yeah, I think there's a higher need for this kind of safety by now, because that's a big difference if your counterparty is insolvent and you can actually recover your assets or not. And that is kind of a critical aspect that most people ignore in good times. But in a solvency crisis, what we have right now, it's like the main question you should ask yourself is, are your assets safe? And if your assets are with a counterparty, you should check that counterparty and make sure that it's a counterparty. Even if they go bust, you recover your assets. And that's what Sygnum can provide, but that's also a key use case for most of the banks. If you don't want to do self-custody because you're afraid of losing your private keys or whatever, you give the custody, the task away. You want to recover these assets, and right now it's been extremely difficult to make that case. I think for a number of years. So we thought that banks would be much faster to actually offer the service, and now we are seeing obviously much higher demand. Even if you pay a little bit more for the service, but at least if the bank fails, you can recover your asset.
Yeah. Perfect, thank you. Christian, you mentioned you are not the issuer of cards, but to enable whatever we are talking here today, it's the on-off ramp. It's very, very important. And not being the issuer, but having, I think, something around 3 billion active payment cards where you are actually connecting banks with technology providers. We know that in your industry, the mobile payments, as an example, there's a constant change and evolution happening, such as it is in blockchain. So besides the smartphone evolution and the payment tools being used, in your role with crypto and blockchain, what are your current projects, experiences you're working on?
Yeah, I think it's important to see that Mastercard is not a blockchain native company, right? We've been around for 60 odd years, really facilitating payments, connecting consumers to merchants. We processed $7.7 trillion in the calendar year 2021, and a lot of partners such as banks, merchants, regulators really rely on us. So I think what the crypto industry is also experiencing at this point is that trust and security is essential. It's a standard that we have been forced to live up to since decades, basically. And we really try to transpose this also into everything we do in crypto. The key touch points we have today is really when consumers use their cards to on-ramp, we call that on-ramp, get fiat funds into crypto wallets to then invest them in crypto assets, and at the other end then to off-ramp back into cards or back into current accounts. And we see substantial volumes here. We see that there's a demand from consumers, from the exchanges to have that solution because it's scalable, it's convenient, it's secure. We also see that we constantly need to evolve our security systems. So we are very mindful of screening the players that can acquire cards to on-ramp money. We look at these exchanges to see, is that something where we want to facilitate a Mastercard transaction? So that's really what we see today, consumer demand wanting to buy and own and hold crypto. Of course, the technology promise, let's call it like this, of blockchain holds a lot of potential for us because we're like you said, we are no way tied to the form factor of plastic. Nowadays, 30% of all our transactions in certain markets in Europe are already conducted by other form factors than plastic, so it's iPhones, Android phones. And we do see that obviously the blockchain technology has the capacity to be the next evolution in payments. Next to cards, we're looking at ACH rails, so account rails, and we do believe blockchain also has a lot of potential in this space. And that's not only due to the events of the last weeks, but as I said, very much ingrained in our DNA. It has to be secure, consumer protection has to be given, regulatory oversight, AML, KYC, all these things have to be given. And that's why we're connecting the fiat and the crypto world from our perspective. We're facilitating the flow of funds between the two and bring our DNA of let's say, the digital, safe, secure payments that we've been delivering upon for decades.
Interesting, thank you very much. And I think here maybe two questions into the round. One is to Dom from Sygnum, and then the other one to Jacek. It's when you look at the whole transactions you have on the payment side, what Christian just mentioned, for you, Dom, you actually have a lot of transactions as well in another sense than Christian has, but how do you address then this issue of actually enabling that AML is being prevented and that you can actually stay in a compliant way?
Sure. So AML and KYC is our bread and butter. It's part of being a regulated bank. We've developed our own proprietary crypto AML solution. And I think a lot of what's been playing out at the moment in the market with trust really validates our thesis of being fully regulated, both in Singapore and in Switzerland. And not a single transaction was made before that point. So since then, AML screening in and out has been done rigorously. And it's really one part of our overall risk framework and a risk culture, which we like to say is everybody is part of this team. So in addition to payments, risk management over the AML, KYC, business continuity management, the way that we manage our loan business as well. So this is really a foundational piece for us, which is really baked into the process and the governance of the company.
Perfect, thank you. And Jacek, when you listen to this, is this something, I mean, that's as well your core business, right? So is there a question you would like to ask Christian or Dom, or obviously as well Lamine or Godo on the current discussion we have at this point in time?
Well, I guess it's important to understand that it's not just the part of the processes done by banks or crypto exchanges, crypto players, financial sector generally. It's also licensing requirement. As mentioned, well, Sygnum is one example. I think together with Seba, first licensed bank, so definitely a pioneer in that respect. This is a requirement for licensing. And this is something that is used as common denominator across the globe by various regulators. So with licensing in place, the regulators, the law enforcement can know what to expect from the crypto players. So that's an important factor. So other than that, I think not really a question, just a statement, but I would say that AML as such is more and more with cases also like FTX, generally compliance. It's been perceived as a blocker and a cost factor, but actually it's also an enabler to open new business opportunities.
Yeah.
If you agree.
I'd certainly agree with that, and I think one of our positions is RegTech certainly can be an enhancer for the client experience as well. You know, it can create, even though while it's still robust and compliant, still smooth, streamlined experiences for clients as they work with us.
Right. And yeah, as we heard and as we know, it's correct in I don't know how many years back, but yes, together with Seba, Sygnum was the first actually bank is receiving the crypto license from FINMA. Yes. And congratulations again to that and the very successful story and road you had since then. Also being a licensed asset manager in Singapore, which is actually really great to see and to hear. So when we talk about accessing digital assets, make them bankable, and as well your approach in the B2B business, what is your secret here?
So our B2B business, just for everyone, is a platform that we work with other regulated financial institutions, and we enable them to offer crypto to their end clients. We currently have 15 banks live and onboarded at the moment, including FiveT and Bordier. A lot of the key to this is offering modular access to our core services. So trading, staking, lending, and custody, as well as tokenization. The core of everything is always the trust in the status and the track record of us as a regulated bank. What I think has been interesting is previously or historically, the other banks have been going, why? You know, why should we offer crypto? And I think we've seen great progress on that. And now it's how and when, you know. And I think this is a value proposition which is very valuable to their clients. It enables them to enhance and grow their offering, reach out and engage a new generation of investors and really future-proof what they're doing, and also to make sure that they can then manage and be the key stakeholder for their own clients for regulated crypto.
Thank you. Thank you very much. I think you would imagine that in times like this, where we have seen all this turbulence in the markets and so on, that the demand is going back. But I think, as I understand from all of you here, there is actually an increasing demand from financial institutions and clients. What is your experience over the last couple of months when you look at actually incoming RFPs? Lamine, what is actually happening with on Taurus side?
Yeah. So we've been since day one thinking that if this industry needed to go from 1 trillion today to 10, 20, 30, 40, we needed to digitize private assets. So we have a product that does it end-to-end since like 2020, We are also self-regulated to provide a marketplace to exchange those products, because you can tokenize whatever you want. If you don't have a marketplace, it's a very nice proof of concept. So in terms of demand, what we see is a massive, massive push towards tokenized assets. So in the press, you probably see the tip of the iceberg. We see what's below the surface, and there is quite demand. So 60% of our clients now are using our technology not only to protect cryptocurrencies, but also to create product, tokenized product. That's basically as a whole. And what we're seeing, and we're getting now clients in the area of consumers, so very large, very big brands that are embracing digital assets, whether they call it NFTs or whether they call it digital twins, as a new way to engage with their consumers. So we're having now clients in that space too.
Thank you.
I would agree that there is an increasing interest of, let's say, a traditional financial mainstream to go in this direction, very mindfully so. That's, for example, why we also partner with NFT marketplaces to add sort of the simplicity that you have from buying and holding other virtual assets, or like MP3s or whatever, just buy an NFT shouldn't be so complex to buy, and that's why we basically partner there. We also see that, as you said, that banks are interested in this space, and we also do believe that there's an opportunity for the industry as such, because from research we know that consumers would, to a certain extent, at least certain parts of the market, prefer to hold their virtual or their digital assets with the bank rather than with a virtual asset service provider. So I do believe that if I, as a, let's say, traditional bank partner to offer these services, I can address a new consumer segment that up until now was apprehensive when it comes to digital assets. So definitely see that interest in the market.
Thank you. You just mentioned VESPs. I'm just curious here if you have experience in that, or else anyone else. When we talk about travel policy, how do you actually monitor a transfer between VESPs? I've seen some nice use cases which actually demonstrate how you can as well ping back and validate the data which is being submitted, which is a bit, let's say, more secure or reliable than it is in the traditional way. You have experience in this with Mastercard as well, or is this something you haven't looked at yet?
Sorry, can you say again?
The travel policy.
The travel rule that comes
travel rule, sorry, yeah.
Yeah, we are looking at this. We some time back we acquired an asset called CipherTrace. It's a bit like a confirmed competitor, or it's in the same market, and we're definitely looking at this because we do see that there's a need for that. Yes, absolutely.
Cool. Thank you. Godo, coming through to you, FiveT Tech, it's coming from Avaloq Ventures, core banking system, and you support a lot of actually development in the tech space. What is your experience these days when you talk about financial institutions? How can they bridge into blockchain technology, and what are the requirements they are asking you? Where do you see the biggest demand and the biggest concern?
Well, so one of the biggest concerns up till now was really regulation and a lot of topics that were not clear how to proceed. And now with MiCA, for example, there are more and more clarity and more visibility. And if you ask someone on the compliance side or someone on the risk side, most of the time, if you answer, well, we don't know, they don't like that answer. So they actually want to know, okay, what is the risk of now onboarding specific projects? What is the risk of doing crypto custody? What is the risk of maybe tokenizing some elements? So they want to know and be able to see that in 5 years it's still the same kind of. So they need that visibility, and it's something that is happening now. And so what happens is in the institutional space there are really two types. I would say there are still a lot of skeptical minds that now see FTX and say, oh yeah, I've told it, kind of, I knew it, and feel confirmed. And then on the other side, you have the people that actually understand and actually see, well, FTX is a typical issue that you have with unregulated entity, with lack of compliance, with pretty much everything you can do wrong on the compliance. From a compliance perspective, they did it wrong. And so the basic thing is just having a board, right? Having a board of directors. When people say, well, there were 2 people on the board, so basically you have no one that actually looked at the compliance of that company, or one lawyer that was very close to the company, let's put it that way. So we think that it really goes towards a regulated entity now, and we see the traction. People that are in the space see the traction, see more inflows. So actually, the building is going well on that side.
Yeah, thank you. You mentioned regulation and MiCA, and I think there's also, when you think back, someone actually tried to put in a regulation into MiCA which would ban actually non-custodial wallets, right? And that was one of the attempts which, in my opinion, luckily could have been defended so far, because when you look at the technology we try to achieve by actually being inclusive and give accessibility to everyone, it is key that we have different regulation as we have in the traditional way, but we agree that on certain levels we do need certain rail guards. And for you all coming in or actually working in a regulated environment, what do you see right now, or what is your opinion on what happened with MiCA? Do you see this as a positive way forward, or rather hindering the adoption?
I think I can answer to that. I'm not in the position to obviously go into the details and comment on certain elements of MiCA, but I think what we've seen in financial services markets over the years, and I'm looking at, PSD2, GDPR, all of these initiatives, is if there is regulation in place that aims to have a level playing field, same risks, same regulation, that is clear and consistent, and aims basically to solve for consumer protection and, let's say, thoughtful, sustainable innovation. I think that's to be welcome. I think history has shown that regulation with these, let's say, pillars or these core thoughts behind is a good thing. And I think MiCA will go in this direction, and I think there's a lot of, open questions on the details, and it's going to be 18 months and so on and so forth. But I think the idea that Europe is, I believe, at the global forefront of this and is taking a very, let's say, cohesive approach is definitely good. Of course, the details, again, need to be seen, but the initiative as such, regulation as such, is very much welcome. And I do believe it will also help drive adoption, by the way.
I can add that definitely a positive development that will help European Union to position itself globally. It will level the play field and also ensure more predictability in the market and prevent arbitrage from regulatory perspective. Just as an example, we've seen jurisdictions giving away licenses too easily, then withdrawing them, or not ensuring that there is the right banking sector to support the crypto businesses, and the businesses had to relocate to other jurisdictions. With the passporting, with MiCA in place, actually the businesses will know what to expect and will be able to set up a company in one jurisdiction, get licenses, then offer their services across the European Union.
Yes, Tom.
Yeah, certainly on a broader note on regulation, I think we've seen a move towards more stringent and more strong regulation for some time. Your point about licenses being revoked, I believe last year Estonia revoked 1,800 of their licenses. in response to a heightened crime. So I think this is a general movement, and again, it makes us feel validated in our strategy from day one regulated. And I think from what happened with FTX, I think this is going to clearly accelerate. I think regulators will have quite a strong hand. I think especially in the area of international cooperation. I do think, though, that one area which investors need to be very clear on is the actual licenses. You see a lot of we're licensed language, but even the same license in different jurisdictions is applied differently, has different requirements, is enforced differently. And of course, all jurisdictions aren't equal in terms of the quality of their regulation and governance. So I think this is an area which is clearly has lots of complexity, and I think investors really need to do their due diligence on what this actually means.
So I think also one word for the audience. Switzerland has been at the forefront of all regulatory developments. So the developments of the markets in crypto assets, so the MiCA directive, is not that different from what we've already seen here in Switzerland. From a pure, I would say, adoption perspective, the very first concern a regulated institution will tell you is, if the regulatory framework is not clear, I'm not going to enter the space. So we've been fortunate that Germany has already paved the way, the French have done the same, Luxembourg has done the same, but we really need something at the European Union level. We actually became experts of the German regulatory law, etc., but it took us quite some time, to adapt each time. But ideally, you have one, foundational regulation and some possible local adaptations. But at least the least common denominator is known, clear, and stable. So for us, it's quite positive and also timely.
Perfect, thank you very much.
And maybe to regulation, it's also a trial and error process. So I think like the kind of positive of an FTX situation, it's overall negative, but the positive is that simple things like proof of reserves, it's something you can require from an exchange. It's something you can require from a stablecoin provider. The technicality around it is in the blockchain space ideal. So that's probably something that we can expect in terms of regulation for the main counterparties in the crypto space.
Maybe one last point also, just of common wisdom, because having a secure platform is not just having very good technology, very good security. I can give you the best car or plane. If you don't know how to drive it, or it's going to be certainly a crash. It's also processes and organization, right? So I think it's very important for the audience to make sure that whomever you work with not only has good tech, but also the process and the organization that goes with it, so the people who know what they talk about. I give you one simple example. In our day-to-day business, we ask our counterparties, do you have exposure to that failed counterparty? And we have been surprised that a couple of them had, and we told them, what were your due diligence processes? And very, very light. So it's very important to make sure that you have the people who have the right experience, or at least the right mindset, because mindset is also important, but also the right processes to make sure that whomever you deal with, they can have the best tech possible, they can have the license they want. If you didn't do yourself the checks, there's always a question mark.
Thank you very much. Unfortunately, in consideration of time, we have to come to an ending slowly, but there's one very important thing, and what you mentioned correctly is you need to know how to drive the car. So how can we actually apply the technology stack? And when you think about what we talked today, or right now, was a bit more, let's say, on the digital asset side, but when you look at actually how can a bank, financial institutions mitigate risk, increase operational efficiency. There is a lot of power in the smart contracts where we can build on and optimize the operations, which will benefit, I think, the end client, but also you in your respective roles. And yeah, I'm very looking forward to continue these discussions with you, but also with the audience. We have on the Marlow, there will be a workshop happening as well today. We have a Credius workshop about the lending and marketplaces. So I'm inviting you to attend there. And on the infrastructure side, maybe just one few last words, if there is something within the next 40 seconds, from Dom to Jacek. Dom.
Right. I think that there has been a setback in trust in the industry, and I think we all need to be glass half full entrepreneurs and really build back this trust and do it as quickly as we can.
Thank you.
Yeah, so it's good to trust, it's better to verify.
Thank you.
I think we continue to be very bullish on the technology and the innovative capacity, but yeah, we as a payment scheme, we tread very carefully, but we're open-minded and very much forward-looking.
Thank you very much. Perfect.
It's all about trust and looking at if you don't do it yourself, do it with a regulated entity that you can trust.
Thank you.
So I guess the financial sector is lucky enough that there are already pioneers like Sygnum Bank, platforms like Metago, Taurus, other Mastercard for on-ramp, off-ramp, and blockchain analytics companies like Coinfirm, right? And it's never been easier for a financial institution to start, also including traditional banks. And the final statement I would say is not just the crypto offering. Financial institutions need to understand how blockchain analytics, AML compliance works. Also, traditional banks, they do have already exposure. They cannot simply neglect the facts that they do have clients, that they purchase assets from crypto-relevant entities, etc. And this is where companies like ours are needed.
Perfect. Thank you so much. So thank you very much for being here for this exciting and hopefully for all you valuable actually discussion we had. And going on further on the infrastructure, please as well, as I said before, go to the workshop. There is actually security at scale with Ledger Enterprise happening. There is, as I said, Marlow and so on. Please use the time, and I'm looking forward to talk to as many as possible in the audience and continue discussion with you. Thank you so much.
Thank you.
Thank you.